After reading headline after headline after headline after headline on the real estate market and seeing how everything is getting so bad, and even seeing statements being released by the NAR on weakening housing markets and the pace at which things are deteriorating, which is absolutely insane, I decided why not go and talk to and have an interview sit down with the one and only Dick Lee, who has over 29 years of experience in the real estate market, and just see his overall general sentiment and ideas and what can happen and what can possibly happen, as well as where we kind of stand right now and what his thoughts are on that. So with that being said, you guys, there's so much to talk about in this video, so much to go over, but like always, I'm not a financial advisor. If you guys do want to join this Discord, a link will be down below in the description, as well as my TikTok, Twitter, Instagram, and all those good things linked down below in the description. So Dick Lee, he is part of EXP World, or ticker symbol EXPI, on the stock market currently right now in the past 5 years. They're up was 16.06%. They're currently sitting at $1.55 plus on the last 5 years, which currently they're trading at $11.20. Now, in the past year, they've had a very, very dangerous kind of chart pattern going downwards, which is currently right now down 74.21%, or $32.22 at $32.22 down. So with that being said, this is still one of the most and the fastest growing real estate companies out there. They currently just reached 86,000 agents, and they recently released their quarter 3 statements, which was amazing. Now their revenue increased by 12% to 1.2 billion. Their gross profit increased 17% to 93.1 million. Their net income was 4.4 million compared to the net income of 23.8 million in the year ago quarter. Their earnings per diluted share of 3 cents compared to earnings per diluted share of 15 cents a year ago quarter. And their adjusted EBITDA currently right now sitting at a $12.3 million. They've had some amazing numbers. They even started paying out cash dividends, and they will be paying out to any stockholders on record on November 14, which that is going to be about 4 cents a share. So overall, they have had a very successful kind of last few quarters. They've done really amazing, and they're actually one of the fastest growing real estate companies out there in the stock market that are publicly traded. So it is a very, very nice to see that. So I decided, why not have an interview sit down? Why not check out what a professional who has over 29 years of experience think of this whole thing, and how they incorporate the metaverse and how it's been helping them a lot. Now, keep in mind, this company was founded in 2008. Now, since 2008, they were founded during a financial crisis, so they've obviously had a very, very rough and kind of a teaching experience and a learning experience when it comes to their past and what they're able to do now in the present. So they have been absolutely amazing. Now, with that being said, that is pretty much it for me talking. I hope you guys do enjoy the interview. See you guys in the next one. Here you go.
All right, so interest rates, right? That's like one of the main things that everybody's been talking about, and you've been seeing them like completely skyrocket. So
Yeah.
they're currently at around 7.8%, if I'm not mistaken, on the 30 year.
It
Uh, had,
depends on who you're asking. Yeah, it depends on who you're asking. Yeah.
all right, yeah. So what do you like? Okay, so what do you think of that? Like, has that affected you in any way as being, a realtor? And
Yeah. So as a realtor, obviously every realtor across America, they're certainly affected by higher slash rising interest rates. Yeah. And the reason why that's the case is because when you're dealing with a certain level of buyers, they're going to be priced out of the market. Um, an individual, a family can only qualify for what they will qualify for. So I'll just use a rate of 7%, 7.375, 7.5%.
yeah.
I looked at rates today, it was 7.5% on a 30-year fixed rate for a refinance on a
Mm,
two-family. Okay, loan size roughly around 600. So if that's a purchase loan, if the purchase amount is 700 and that's what they're maxed at, then that's what they're maxed at. Okay. If the rates continue to rise, which they will go up a little bit higher, okay, I honestly believe that they will continue to rise, then that demographic of a family will then be priced out of the market, okay, to maybe from 750 to maybe 700 or 680 or 660. Prices as a whole, I say this as a whole, in across America, there's still an issue of lack of inventory, when you have lack of inventory, you still have price stabilization. Okay, so yes, certain markets are seeing the negative effects of higher rates, meaning lower values, price adjustments, or price
Yeah.
improvements, we'll say. Okay, it is a price improvement when you drop a price on a listing. Okay, it's a price improvement because it's an improvement for the buyer. Okay, it's a price
Yeah.
drop for the seller, but a price improvement for the buyer. And that's a good thing. An improvement is a good thing. Okay, so yeah, so the rates are affecting certain buyers. Okay, so it's important for realtors to work with the different demographic of buyers, if possible, which are, we'll say, not affected by interest rates. Okay, they're going to buy a house because their family needs to buy a house. They need to upgrade for whatever reason, and they're not affected by the interest rate. But at the end of the day, everybody is affected by the interest rate. And when I say those families who are not affected by interest rates, is those are the families who want a mortgage, they don't need a mortgage.
Yeah. So now you work at EXP Realty, which is one of the fastest growing. I even covered you guys in a video because it was just mind blowing, like the way how you guys incorporate the metaverse. Over 85,000 agents that work with you guys. So that's really impressive. But would you say that using and having a platform of real estate on the metaverse definitely help you guys a lot during this times like this? Or how would you say it's made your overall experience as a realtor?
Absolutely. It's so one quick thing about EXP is that 13 years ago, Glenn Sanford founded this amazing platform that we call EXP Realty. Okay, the metaverse. It's in our EXP world is a metaverse platform, and we were founded in the last recession. Okay, 13 years ago in 2008, where guess what? We crashed and burned as well too. So we're used to having an environment without a brick and mortar. Okay, most real estate agents, most loan officers, most financial advisors across America, across the world, everyone is used to working without a brick and mortar. All right. The pandemic has taught us that yes, you can still be effective and still work at home with the right microphone, with the right Zoom camera. And as long as the internet doesn't shut down, we're still good. Okay. So yeah, it does help us sell more homes because we're able to go faster with technology than other brokerages can. So it's the biggest thing, eye-popping thing today was that I have a beautiful luxury listing that's coming up. And when I ran the analytics on this, Ilya, there's almost 5.3 million online engagements with EXP Realty.
Wow.
When I ran this number right around 1:30 this afternoon, earlier today, about an hour ago, 5.3 million online engagements with our brokerage.
Wow, that's impressive. That's
a big number.
Nice.
I was shocked.
Where's this listing at? Like location wise?
Massachusetts. In Massachusetts. I'm based out of Boston. Yeah. So I've got a couple things working. I've got a new construction that's being framed as we speak. That's going to be listed just a hair over 2.6 million. And I'm working with the developer that had a listing that was canceled. The prior broker didn't do his or her job appropriately to his satisfaction, and I have the opportunity to relist that, and that's going to be listed just a hair over 4 million.
And again, is it like a struggle trying to sell out these houses like currently right now, or would you say that it's completely fine like during the current market condition that we're at? Because there's a lot of fear right now in the real estate market. So
yes, without doubt, there's a lot of fear. Homes are being sold. When you look at historically for homes, let's look at 50 years ago, even 100 years ago. As long as you could track data for home ownership and home sales across America, there is a home being sold every single day. There's hundreds of homes, if not thousands of homes being sold every single day across America. It's a question of whether you as the real estate agent or you as the loan officer or the insurance agent or the attorney or title company is a part of that transaction or not. Okay. There's a transaction that happens every day. And guess what? Today, I don't have a closing. So I'm not part of that transaction today, but I have one tomorrow. Okay. And I have one next Tuesday. Okay. So I'm part of a transaction. It's a question of, are you, meaning the individual watching this video, are you a part of this transaction? And if not, are you a part of any transaction in any 30-day cycle?
okay, all right. Yeah. So do you currently have a strategy during these types of market conditions that you're doing differently compared to what you would normally do? And
nothing that's really different. What I do is when I coach real estate agents, I coach loan officers, I stress the big thing that I stress on right now is going back to basics. Okay. If you're a brand new real estate agent, if you're a brand new loan officer, you're already at the basics. If you're an experienced loan officer, you're an experienced realtor, and you're, let's say, experienced 5, 10, 15 years, 20 years, then go back to basics. Go back and hit your old database, because if whether you're 5 years in the business, 10, 15, or 20, you have previous clients, a previous sphere of influence that you could tap into. Okay. The biggest thing is FU, follow up.
Yeah.
Okay. When you have FU, you have follow up. Okay. And if you don't follow up, somebody else is following up. And that's a lost opportunity if you're not following up. Okay. So getting back to basics, understanding your market, understanding days of market, understanding how long inventory is for each market if you're a realtor. Okay. Understand how to find that client, create the inventory, because there still is a lack of inventory. There's inventory out there, but that may not be the right inventory for your clients.
Yeah.
Okay.
Yeah.
And there's a disconnect between the seller and the buyer. The disconnect meaning the seller still thinks that they could sell the house for whatever they think their house is worth 9 months ago, a year ago. And the buyer is seeing all the negative press that's happening in the news about rising rates, the Fed raising everything, recession, gas prices. All these are negative things that we see today, because and I don't want to politicize this, okay, or make this a news frenzy, but the news, tell me when the news ever has any good news.
Never does.
Never
They
does.
don't get clicks like that. Yeah.
They don't get clicks at that. Tell me that does the news ever talk about crypto or NFTs? No, because that's not what they're paid to report on.
Mm.
All right. So, you know, I asked the people that are going to watch this video to put their blinders on, focus on their tasks, focus on their goals, and things will be okay. But go back to basics. All right. Go back to what you learned when you first got into the business. Anything that you do, go back to basics and things will be okay.
Yeah. So are you diversified in any other places? Because you mentioned crypto, NFTs and stuff like that, or is it just
I dabble. I don't proclaim to be an expert at anything. I think you know, there's several platforms that I think that are right for the picking. You know, when you say diversify, a couple 10, 15, you know, $1,000 here and there, just dabble.
Mm.
You know, nothing that I would lose sleep over if I had to lose it. But the reality is, how much are you really going to lose it? Because you're just buying a fractionalized piece of it. You're not buying the whole thing.
You make a good point. Yeah. So, all right. And then for any like new realtors or any upcoming real estate investors and stuff like that, I mean, especially now as everything is starting to kind of get lower, what's your advice towards them? Because you have really good advice when it comes to that.
Yeah, you know, realtors really, as a new realtor, let's say you just got your license yesterday.
Yeah.
Okay. Is really get involved with somebody in your local market, or somebody that has been through this already, has been through the cycle. This is just a small blip on the radar. Okay. You remember just a year ago, things were great. Money was flowing. Money's still flowing, just at a higher rate of interest rate. Okay. There are less transactions, but there still are transactions. Okay. Sellers still have a lot of equity to be sold on, meaning they bought the house 5 years ago, 10 years ago, 15, 20 years ago. There's still a lot of equity when they sell their house. And when they sell the house, their real estate is being impacted positively for themselves because they help their family, for the family that they just helped. So connect with someone that understands the market, that has been through this, a mentor. Okay. And when you find that right mentor, the mentor will guide you as a new real estate agent through the next 6, 12, 18 months. Okay. Because if we had this conversation, when we have this conversation in 2024 or 2025, let's just say it's November 2025, and we have the same conversation, it's going to be good times again. Money's going to be free flowing once again. The rates will definitely come back down. The interest rates, meaning the Federal Reserve, okay, they have to come back down. There's no reason why it's even that high right now to begin with. Okay. So, you know, why is it that high? Because they're trying to control inflation. But inflation is already moving forward. But why did inflation happen? Because people are making a lot of money. Okay. So when you raise rates, who are you really hurting?
Yeah, that makes sense.
The people that need the help the most.
Yeah.
All
right. So
the advice is find a good mentor, attach yourself on a platform that allows you borderless growth as a new agent. Okay, because it's all about growth. growth of your personal business and your personal sphere of influence.
Right, right, right. So there's some actually data that recently came out with all the four regions in the US recently had a huge reduction in like contract signings. The Northeast had the largest dip, about 16.2%.
Mhm.
The West had a decrease of 11.7, the Midwest 8.8, and then the South had 8.1 with the slowest amount. Do you think that kind of how everything is starting to be reduced and like there's a lot of fear because that's mainly the reason behind the reductions. Do you think that the fear will continue on going into 2023, or do you think we'll start seeing sort of like a pivot in sentiment?
I think we'll see a pivot in 2023 without a doubt. And just because of the contracts, there are less contract signs because there are less people who qualify to buy a home.
Yeah, right.
It's not because the desire is the desire is still there to be a homeowner. Okay. Do you think people don't want to be renting forever? Okay. People rent
Yeah,
for a reason because they can't afford to buy. So that with that same notion, that same breath is that rents are also at its all-time high. Okay. So there's a shortage of rental properties out there because people are priced out of the market when they're trying to buy. So you're displacing the lower middle class that's trying to achieve a goal of home ownership because rates are rising. Okay. And everything that we see today, the rates that, the Fed fund rate, the prime rate is at 7% right now.
mm,
Okay. So when you go to a bank, you get a home equity line, it's usually a prime minus a half. So you're paying a 6.5% rate for your home equity line of credit. Okay. And and typically when you look at that, the prime rate, the prime rate is usually about a point lower than the 30-year fixed rate on a mortgage,
right.
typically on average. So yeah, the rising rates, if they stop raising rates, it'll stabilize. Okay. When they lower the rates, everything's going to fall into play because the bonds, mortgage-backed securities, everything will fall into line. And that's going to create the pivot, as you say, for 2023. But I think we're going to go through the holidays, and I think there'll be a slight pivot where stabilization for rates we'll see hopefully by March.
All right, all right.
Yeah,
And do you think election will definitely have some type of impact? There's
absolutely.
been a lot of talk of that. Yeah, yeah.
Yeah, absolutely, absolutely. Americans are very, very angry people right now. They're angry for multiple reasons. For no fault of theirs. It's this election is every election. Tomorrow's election day. Make sure
Yeah,
you go out there to vote if you are allowed to. If you're eligible to vote because your vote does matter. Okay, but you want to make sure you're voting for your future and what you believe in, not what the media is pushing towards you.
right, right. And so with the media, going back to that, how you said earlier that there's they only promote bad news and whatnot. What would you say is good news though currently right now at the current market state? What do you see as a good sign for the future?
Opportunity. I think home ownership it's if you're a great example right now, Ilya, I'll say this. If you are a potential home buyer that's been priced out of the market for your primary residence, don't let that deter you. Okay, reach out to me, reach out to you, because I'm going to give you access to this, to an organization where you have fractional ownership on an investment property. So you're going to have a small piece of a pie for an investment property that's going to refill and replenish your savings. Okay, because if you have money in the bank today, properly invested, rates are high. That's a good thing.
Yeah,
Okay,
yeah.
so because rates are high, if you're properly invested, there are certain institutions that's going to pay you a larger return on your cash than, let's just say, a regular bank. Don't put in the CD, don't put in the savings account. That's not going to help you.
Yeah, bonds
Okay,
have that right now, 9.62%, I think, on
isn't it?
iShares.
Is it
Yeah, yeah,
amazing?
not yeah,
It's
it
just,
is crazy. I'm
it's
actually gonna
amazing.
be buying some bonds pretty soon. That's
Yeah,
my
all
plan.
day long. Hold on to that. That's
Yeah,
what they do. They're all that free money that was passed around during COVID. You think that's free? No, it's costing
no,
Americans right now. All right, it is nothing. They were free. All right, so if people had just went to work and did everything else, then we wouldn't be in the situation. All right, so again, go in there, look at fractional ownership. Reach out to me. I have an option for you, for whoever it is. Reach out to you because I'm going to give you the access to this too as well.
yeah, yeah.
Ilya,
I'll
right?
put it up for everybody. Yeah, of course.
Yeah, because it's if you can't buy your home yourself, buy a piece of the home, buy a
Mhm.
piece of an investment property, and let your money work for you in a real estate investment where you get a tax deduction on that.
Okay,
So
all right.
that's an opportunity.
That's really
And then
nice. Yeah, yeah. I'll
yeah,
definitely be including that. Yeah, just
yeah.
send it over later. So
Yep, there's that, and then there's always development opportunities too. I love working with developers. when you work with developers on a large scale across the country, okay, then you're making money work again too, because again, just because rates are high doesn't mean homes are not being sold. They're still being sold as we speak. So would
Right.
you rather buy let's use a condominium example, for example, would you rather buy a resale condominium? Or would you rather buy a new condominium that's brand new
Definitely a new
construction?
one. Yeah, yeah,
If
definitely.
and if the new one happens to be with better amenities, a better warranty, and the price point is just maybe just a little bit more, would you pay more for something that's better quality?
Yeah, probably. Yeah, it
Yeah,
saves you in the long run.
as long as you can afford it.
Yeah, yeah.
Yep. And so these developers that I'm working with, we specifically design a plan for them so that they can't fail, and they put out a product, a home that is competitive in the market space that they're developing in.
Now, most of these developers that you're working with, are they just mainly based in Massachusetts, or are they opened up more in like New York, New Jersey
Yeah, we
as
have
well?
access. I have access to several developers in all over the country. Within my platform at EXP, within my organization, I've got over 160 realtors in the New York State market.
Wow, very nice.
So what? Yeah. What I talk about here in Massachusetts, those guys are doing the same thing in the New York tri-state area.
Very, very nice. Yeah,
Yeah.
that's
So
that's awesome.
we're kicking booty.
That's really nice. It's really
Yeah.
nice. So, all right, then other than that though, what other do you see any like fear factors though? Because I can definitely tell that you're very opportunistic, you're very optimistic when it comes to the real estate market, but any fear factors that you kind of want to be careful of or just keep an eye out on?
It's be fearful of be fearful of what you're investing in, right? So if you're an investor in if you're an investor in the stock market, be very careful in the stock market. I'm
Right.
waiting for that to really fall. It's going to fall. It's just a matter of time. Okay, so one thing that we can so when you talk about if the Dow, Nasdaq, S&P 500s, they all fall, if it turns red in one given day, that's a
Mm,
bad thing. It's a crash, right? It's an adjustment. So what's bad for the market usually results for good news for mortgage bonds, because
mm.
the safety is always in the bonds. You just said they're paying 9%,
Yeah, yeah.
right? So
9.62 crazy.
when money gets pushed out of the stock market, it's being pumped into bonds. So when bonds are high, mortgage rates tend to drop a little bit.
Okay.
So
So
look for that. Look for that. Be careful in the stock market. Okay, just tread with care. Okay, because when you see, you could really watch the market historically. If you look at it, if you track it, I've watched your TikToks, by the way, and you can see when
yeah.
you have all the screen, the colors and everything. If you go back historically to a date where you see the market crash and correlate that same day with the bond market, you're going to see the bond market spiked up, but the same day that the stock market went down.
Right, right. So you think that the shift going from the stock market to the bond market is definitely a huge risk factor that's out there.
It's a risk factor in the stock market if you don't
Yeah,
position
yeah, of
yourself right.
course.
If you don't exit your position, if you don't unload
Yeah,
your position, yeah, you'll get hurt. So it's really, it's not a game for an amateur, but it's a game for someone that's really paying attention. So if you're day trading, as an example, if you're day trading, I think it's a tremendous opportunity, but also tremendous risk at the same time too, because it,
mm.
it could be very volatile. I haven't looked at the market all day. What's the market doing today?
Today, right now, it just like it was completely choppy, just skyrocketed right now. But we closed out a few of positions that we had
Yeah,
recently, so those paid out nice too.
yeah, because you're attuned to the market. You see it. You have your
Yeah,
stops
like
on there, and when it hits a certain point, you're selling.
markets
Yeah.
open 9:30 to 4. I'm on that thing until like 9 at night. So
Yeah, so you see what's
definitely,
happening. It's you have your limits and everything in place that it's going to execute when it hits a certain level. And if it
yeah.
keeps rising, then that's okay, because you weren't expecting to go that high. But if you're at your desk, then you could really watch it and push the button at your own leisure.
Yeah, yeah.
Yeah.
They trade both ways, whether I'm hedging against or going for. But my overall like thesis on the stock market and like what I like to do is just long-term investment. Any money from day trading, and I've said this like many times, compound
Mhm.
interest probably the best thing anybody can do with the stock market.
Yep.
So that's the main thing that I've been working is just like set up steps, going forward. But
Yeah, it's just you just got to watch your step, because I said, if you're attuned to the market, you see what's happening to it. If you're not watching it like a hawk, it can fly away from you.
yeah, definitely.
Yeah.
Definitely. So, speaking of the stock market now, I did see your guys' stock, and I was completely in love with it. In fact, so much in love with it that I even made like a whole, YouTube video behind it and stuff, covering it with the metaverse. So you guys recently came out, reported numbers. Those things just, it was amazing compared, because compared to other real estate companies like Open Doors, Zillow, Realty Income, and other companies, you guys did phenomenal. Now, what do you think is the difference and what's separating you from, let's say, Open Door, who's also using that kind of virtual reality type thing, or at least attempting to?
Yeah, it's so I am by far a financial analyst, and I'm not a stock guru or anything. Right?
Yeah, of course, of course.
I leave that stuff to our chief financial officer, Jeff Whiteside, who's an amazing, brilliant individual, along with Glenn Sanford, our founder. So what I look at that is, I think that the number one thing that why our numbers are thriving beyond others is that we have no debt. The company is zero debt and a lot of money in the bank. And if we're acquiring other assets that are helping our other ancillary products, then it's a win-win-win for everybody. And it's also the agent count as well too. There, when brokerages, work everything based on agent counts, and if our net agent count is on a positive every month, which it has been the last 4 or 5 years, every month we're adding new agents, and we know, but yeah, we do lose agents as well too. Every brokerage loses agents, but net we're ahead of the game. But the quality of agents that we're bringing in are top-notch agents. Okay, the more volume the agent makes when they onboard with our brokerage or EXP, the more they're going to earn for themselves and their families. So why wouldn't they make the shift over? Right, that's the first thing. So yeah, so our the numbers of the speak for themselves because we're selling more homes than other brokerages. I made mention earlier, 5.3 million online engagements across the platform right now. Right, I'm not sure if any other brokerage can claim the same.
Yeah, that's really impressive. It's crazy.
It's crazy. So if we look at that as an example, right? Let's just say it's 5.3 million, and let's just say 10% of that, what's 10% of 5.3 million?
5.3, 10, like I want to say about 500,000.
Let's say 10% of that. Let's say if those 10% happens to buy a house in the next year.
Yeah, that's
only 10%.
Only 10%. Wow, for 500,000 people roughly. Yeah.
When you think right now, we know the number is probably higher than that. I'm just using 10% as an example, and that 5.3 is growing on a daily basis. I'd love, if we hopped on this call, the same call in January, I bet you we'll be close to 6 million online engagement.
Yeah, I could definitely see that. I mean, you guys have just been growing amazing. 85,000 agents. That's also pretty impressive too. But.
And by then my guess is that we're November, December. We're going to probably be 88,000 agents by then, if not more.
Okay.
Right.
Yeah.
And then I say that 6 million. I say that with all respects to everybody else out there, because so we have right now, what's today's date? The November 7th, the 6th.
7th, sorry.
November 7th, right? So, 7th. Fast forward, next Friday, we're Veterans Day. Thank you for everybody, all those veterans out there watching and they served, right? Thank you for your service. All right. And then a few weeks after that, we're Thanksgiving, and then now we're December, Christmas, New Year's. And then, so we're entering the slow time of the season. So we know historically when January comes, everything just goes straight up.
Okay.
More activity because family activities are over.
Yeah,
it's always happening. Family activities always happen, but the holidays, families are, I can see that this Thanksgiving is going to be busier than ever for travel. Even though travel prices have gone up, gas is still up. People are still, they want to get together. We're human beings. We need the contact. So Thanksgiving will be a higher travel season. Then you have all the holidays in December and New Year's, and after that, back to business. Business is always happening. It's a question where you are in business.
Of course. No, that's very well said, very well put.
Yeah.
But
then you look now. Look, ready? Let me ask you a question. December. What's the last day of the trading month this year? I'm gonna look at the calendar. December. It's always December. December. What is it here? Look at the calendar.
Here.
So December 30th. December 30th is it's a half day of trading. It's always because that's the New Year's Eve is on. New Year's Eve is on a Saturday, right? So then we actually have a longer weekend because New Year's Day, and then New Year's Day is on a Sunday, but it'll be celebrated on the first, observed for a holiday on the first, right? Which will be the second, right? That's where it's observed, right? On the second. So the first day of business is really January 3rd, as I look at my calendar on my other screen here. But you're going to see that last week, that right after Christmas, that week right there. Traders are going to be taking positions. They're going to be shorting positions people need to sell, or and then there'll be a big flurry of buy as well too. But I think it's always been red towards the end of the year.
Yeah, yeah. You
Right. So,
historically, yeah, it's the last 2 weeks have been very volatile.
yep. Tax purposes.
Yeah, that too. Yeah.
Yeah.
So, all right. Well, that's nice. But so it's towards the end. I can't really think of anything else unless you want to include something, or if you have any questions for me.
Yeah.
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 So
Tell me really quickly about your trade, the trading ape. I know that, you're a young professional. I met you a couple of times at different events that I've had in New York. I'm heading back there this week. I'll be in New Jersey and Perth Amboy on Thursday, and another one. I'll be back in Westchester on Monday. And the week
yeah.
after I'm in Long Island. So
Oh, nice.
I'm heavy travel because that's where my team needs my support. And then we have, I've got several local events here in Boston, and as we get warmer, I know there's something going to be in play early December for Miami,
Very
and
nice.
Dominican Republic in January as well too. So our team is growing fast, and I'm just very happy and with very gracious to be part of this. It's
That's
pretty
very
pretty
nice.
powerful. So tell me about trading. If you're doing your thing, subscription. Tell me about that.
So
How can our viewers watch you and help you?
yeah. So what I like to do is, so I basically run like this investment group, right? It's called the Ape Center. The way how I promote it is through TikTok, which I should probably be posting a lot more than I do post. But I've been focused so heavily on the group because we're working on like a few things. So yeah, it's on Discord. We have a bunch of channels. We give out free alerts, long-term alerts, everything like that. Now, of course, we're not financial advisors, so any loss and stuff like that is up to the person. Now, the reason why I post the alerts and stuff, that's just what I'm buying, what I'm selling, what I see going on in the markets. We have a pretty good track record. It's me and this other kid. His name is also Kevin. His name's Kevin. Me and him together, it's like a tag team duo. His technical analysis is crazy. We also have another guy. His name's Daniel. He's not as active in the alerting thing, but he's definitely behind most of our plays that we do because we like to trade earnings a lot.
Mhm.
And we've been doing pretty good on those. We have like a weekly recap. This is all completely free. We also offer a chat room where you can talk to other traders as well as us if you need any help or anything like that. We have a bunch of links and stuff to YouTube videos that can definitely help people who are just starting to get started. And yeah, then I just have TikTok to promote it. I have YouTube where I talk about like a certain stock, what I see, what I think of it, and whatnot. Then I also have Twitter just to mess around a little bit on there, and then Instagram as well, just a personal thing. So that's really how I have it. I want to get started on Rumble pretty soon.
Okay.
Because a lot of people have been going there. I see that as an opportunity. So I was like, why not?
It's
Opportunity calls.
Rumble, you said?
Yeah, Rumble, like the new
Okay.
social media thing where a lot of people are
Okay.
going uncensored. So
I'm
that's
gonna
gonna be nice.
have to join that now. It's I always like to hear things. I try to stay attuned to as many social channels as possible. That's Rumble's a new one, right?
Yeah, it's like because it's uncensored. So like a lot of people who got banned on Twitter, Twitch, YouTube and stuff like that, they just completely moved there.
Okay.
So yeah, it's
That's a good
just
thing.
nice. Yeah,
Yeah.
it's nice. It's
Yeah, it's
opportunity is what I see it.
opportunity, and for the viewers out there, they should be smart with their decisions and not just rely on the advice and whoever is on any platform. Do their own homework and do their own research is really what they should do.
Big one.
Yeah, but I love the fact that it's uncensored because it doesn't, there's nobody's pushing any agenda towards anybody.
Yeah.
So
So I like that a lot about it. So.
Personal view, personal perspective.
Yeah.
Yeah.
No, I like it too because like for example, so if you use, which I didn't even know this, but if you go on YouTube and you say, the virus word, or you say, because I don't want to, just in case, like I don't want to get involved in anything, but if you say that on YouTube, I don't know if you could get flagged or something can happen. I don't know the exact specifics because I haven't read much into it. So it's like stupid things like that I try and avoid. But
it's just because someone's watching.
Yeah, exactly.
And if your narrative doesn't fit their narrative, then it is what it is. Because
pretty much.
So Rumble's the way. RUMBLE,
Rumble
right?
is the way. Yeah, Rumble.
Okay.
They're also traded publicly on the stock market, which I'm probably going to be investing in pretty soon. Like start dabbling up some shares in there as well. That's also a big plan of mine.
Thank you for that. Yeah, I didn't know about Rumble until now. I'm gonna download the app. I'm gonna download and set it up as soon as we finish the wrap up this call.
Yeah, sounds good. All right.
Yeah.
Well,
Yeah, so awesome. Yeah, listen, I appreciate you inviting me to this call.
yeah,
And
yeah,
I'm
definitely.
looking,
Thank you for being here. Thank you.
yeah, I'm looking forward to the finished product here.
Sounds good. Sounds good. I'll definitely be working on it.
All right.
But yeah. All
Okay.
right.
Awesome. Awesome. Thank you so much.
Thank you. Thank you.